Hello and welcome. You are watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Well, the Nifty seems to be consolidating after 3 days of gains. Yesterday, we just saw the Nifty trading in a 100-point range. And on the flip side, it was the broader markets that were in a league of their own. The Midcap Index gained for the 7th straight day and is now up over 4,000 points from the March 20 lows as well. The Small Cap Index also has gained for the 8th straight day in a row and has now gained about 1650 points from the March 20 lows. The Realty Index has hit a 16-year high after rising for the 8th straight day. A lot of moving parts in the broader markets for sure. But the question is, will the broader markets continue to gain on the uptrend even if the global market support is missing? Very good morning to all our viewers and good morning to you, Shail.
Very good morning to our viewers. It's a fine Wednesday opening slate as far as the markets are concerned. On the broader side, you can well make out how rallies are now being picked up in the mid-cap space, in the large cap space. The mood seems to be quiet. Now, what is really interesting is that after about 7 or 8 days of consistent gains, the Nifty is now looking a bit tired, and it's looking to rest more than anything else. But the broader markets are in fine shape. If you look at the advanced decline ratio in the F&O space yesterday, it was to the tune of 133:54. And that actually shows where the action is. It's not in the Nifty, it's not in the Bank Nifty. But as far as the Nifty is concerned, there is a mood that you just might see this consolidative phase continuing. Within the Nifty also, the advanced decline was 27:23. So the bulls, although they have the front foot and the driving seat, they don't seem to be able to go above 22,500. And the reason for that is visible in two fronts. One, crude oil is now above $90 a barrel, almost $90 a barrel, and this is the price that you saw somewhere in December of 2023. That is a pain point for the Indian economy, and all traders and all intelligent investors are keeping one eye out on how crude behaves. Remember, on December 23, which is the 13th of December, crude was at $73 a barrel. So from 73 to almost 90 in a span of 3 months is what has happened on the crude oil. Now we also have the Monetary Policy Committee meeting for the Reserve Bank of India starting today. Friday will be the credit policy day. So the markets in any case are hamstrung by these two major events which are not in their control. Therefore, this sideways to zone that is you see on the Nifty. Now, if you look at the option chain, there is a clear indication that 22,500 is a major resistance, and at that point of time, you've seen about 42,000 fresh contracts. This is the resistance that is getting stronger, being added by bears at 22,500. Where is the support? Well, you see a very strong support at 22,400, 22,350 and 22,300. All put together, about 42,000 contracts on these three levels have been added by the bulls, which essentially means that the Nifty is now narrowed into a zone which is about 22,350 to 22,500. So if you get a dip towards 22,350, that is a zone that you should look forward to as far as an intraday purchase is concerned. And if you get a level of about 22,520, 530 is a zone where you should exit. Any move above 22,530 for a period of about 30 to 35, 40 minutes will then result in a breakout. But let us see how that pans out. For the Nifty at the moment, as was pointed out, it's a very narrow trading range. It's just resting. It's risen about 820 points since the low of March 20th, which was 21,750. And this is a time to just pause. As far as the Bank Nifty is concerned, it's the weekly expiry today. The index is above all major support levels. HDFC Bank and ICICI Bank are in fine shape, but it being the weekly expiry, one must just wait for flat trade. The index itself shut shop at 47,545 and 47,500, 400, 47,000 in particular as far as option chain is concerned is an extremely strong zone.
Let's start off by understanding what the global cues are looking like. US stocks fell on Tuesday as investors weighed chances that the Federal Reserve could delay cutting interest rates, while even Tesla shares dropped after the electric car maker posted fewer quarterly deliveries for the first time in nearly 4 years. That led to the global markets, especially the US markets, Dow, Nasdaq and S&P 500 being subdued in the trade. In fact, it was the Dow Jones that dropped about 1%. And the Nasdaq was down by 0.9%, and the S&P 500 also lost about 0.7% in trade yesterday in the overnight trade. Especially after this, we've also seen that the stocks in the Asian markets have slipped in the early morning trade today after solid economic readings as well as higher commodity prices that have now spurred speculation that major central banks could keep interest rates higher for longer. We've also seen the Kospi down 1.5% in trade and the Nikkei down about 1% in the early morning trading session. Both the Hang Seng and Shanghai also down in trade to the tune of 0.5% to almost 1% in trade. The trends in the GIFT Nifty are also indicating a weak start for the Indian markets today. 142 point of a loss of 0.6% of a decline is what we could be looking at in the pre-opening trading session. Now, as far as the flows are concerned, the FI has net sold shares worth about 1622 crores, while domestic institutional investors purchased 1952 odd crore rupees worth of stocks. Now, in terms of specific stocks that you need to keep an eye out on, well, it's Ultratech Cement first that you need to keep an eye out on, because the company is going to be commissioning 2 new greenfield capacities totaling 5.4 million tons per annum in Chhattisgarh and Tamil Nadu. The company will also be investing 32,400 crores towards the ongoing capex over the next 3 years. JSW Energy is the next one that you need to keep an eye out on. Here, the board has approved raising 5,000 crores via QIP and has launched the issue on the same day as well. Now, floor price is been set at 510.09 rupees. It's a 6% discount to the stock's closing price on Tuesday. Anupam Rasayan, that also is going to be in focus today. The company has signed a letter of intent with the Japanese multinational worth $90 million for 743 crore rupees in the Indian rupees parameters. Now, Z Entertainment could be in focus. Z's MD and CEO Puneet Goenka has announced that he is taking a 20% cut in his personal remuneration on grounds of focusing on the company's growth plans. So that's going to be in focus too. March 31st, 2024, with the increases in disbursements and business assets. In March 2024, the company's total disbursements were estimated at around 6,100 crores, reflecting a 9% growth from the previous year. The fourth quarter of FY24 saw disbursements of about 15,300 crores, an 11% increase on a year-on-year basis. Zomato could be in focus today. The company has disclosed that it has been served with a service tax demand and penalty order exceeding 184 crores for the period October 2014 to June 2017. Of course, the macro data will be in focus. Remember, the Indian economy is now projected to grow at 7.5% in 2024 as per the World Bank. It's revised its earlier projections for the same by about 1.2%. So that could be fueling in some kind of positive sentiments in the markets. Of course, the RBI's monetary policy 3 days meeting has begun today. Governor Shaktikanta Das will be unveiling the first monetary policy of the fiscal year 2025 on Friday. That's on April 5. And according to a majority of economists, the RBI could keep its repo rate steady and unchanged at 6.5% at the conclusion of this 3-day review meeting as well. So those are the stocks that I'm watching out for.
What's really interesting is to look at a couple of other features as far as markets are concerned, and we'll start with ONGC and Oil India. The reason is fairly simple. You have a boil that's coming into crude oil prices, and ONGC itself has corrected from 283 to 272, although it's up for the last 3 trading sessions. It is India's largest oil explorer, and if you see how the open interest here is shaping up, that looks pretty well. 1.2% up in yesterday's trade as far as futures is concerned. At the moment, ONGC should be in fine shape. I'll just give you the details on the open interest movement. It's down 0.8%, which essentially means that the short positions that were there, they are moving out, and that bears well as far as markets are concerned. Similarly, in the cash markets, we'll be also looking at Oil India, again a government PSU. This is straight in the lines of ONGC as well. The stock moved very sharply yesterday, 630. The all-time high here is somewhere in the vicinity of. So these are the two stocks that you will watch on the long side. What's also interesting is HPCL, BPCL and IOC. Remember, they started out in a frenzied move in late trade yesterday. These have to be watched only because crude oil prices are firming up. That's a pain point. So any move from the government to let these OMCs to absorb this rise in oil prices will obviously result in reduced profitability and therefore might impact stock prices. So HPCL, BPCL, IOC on the short side and ONGC and Oil India on the long side because of crude play. Ultratech Cement, we've already discussed this in terms of the news that has come in on the company, but a very strong move that was seen in the last half an hour of trade just might continue as far as today's early morning trade is concerned. I think the maximum amount of work that's happening is in mid caps and small caps, and that's where the action is for the moment.
All right, we will await for our guests to join in. Gaurang Shah will be joining us very shortly. He's the Senior Vice President of Geojit Financial Services. But in the meanwhile, a whole host of brokerage houses reports is what I'm keeping an eye out on. So the first one will be Ultratech Cement. Here, Morgan Stanley is given an overweight call with a target price of 12,000. So that's going to be important to watch out for. And they do believe that it's crossed 150 million tons of capacity and it continues to be focused on capacity market share gains and also remains key to the volume market share gains as well. The size, pan-India presence, balance sheet strength, it all makes the company best positioned in the cement space for Morgan Stanley as far as the cement pack is concerned. Jefferies has come out with a report on M&M Finance. It's given a whole rating with a target price of 300. Here they believe that the disbursements have grown 11% year on year in the fourth quarter and collection efficiency was 101%, and that could be auguring in well for the earnings estimate that they have penciled in for the company going forward. On the other hand, HSBC has come out with a report on Asian Paints. It's given a buy rating, but the target prices have been slashed to 37.50 for Asian Paints. HSBC believes that the possible imminent pricing disruption and prospects of margin erosion could weigh on the stock going forward from here. So that's going to be somewhat, disappointing as far as the report has come in. ICICI Lombard, that's in focus. UBS has come out with a report and also Jefferies has come out with a report on the same. UBS has downgraded the stock to neutral, but the target price has been raised to 1785. Here they do believe that ICICI Lombard's focus is on profitable business and motor segment could drive the recent rating as well, and combined ratio guidance could review may occur post Q4 of FY24. Jefferies, on the other hand, says that the company can deliver 16% CAGR in premium over FY24 to FY27 and also lifts estimates by 2 to 4% in that respect. So that's a positive report coming in from Jefferies or ICICI Lombard. UPS has also come out with a report on Chola Investment Finance, and they do believe that assuming coverage, the neutral rating stays and the target price they've come out with is 1290. And they do believe that the company has a sector-leading EPS CAGR of 26% from FY24 to 26 estimated earnings. Also, largely secured and long-tenured loan book could be a positive, and continued diversification in products is another thing that is giving them the confidence that the stock could continue to inch higher as well. So those are the particular stocks which are on brokerage houses' radar right now.
Deserves mention, and the fact that Gaurang will be joining us very shortly. Will be taking his views on both Asian and Ultra. The point that Grasim, the flagship company of the Aditya Birla Group, has entered the paints segment over the last 2 years and has a very aggressive 3-year target of 10,000 crore rupees in terms of top line, has impacted Asian Paints negatively in a market which is at a record high. And a multi-bagger like Asian Paints over the last 20 years, which has created huge amount of wealth, is something which is worrisome. But we have the right person to answer it. Gaurang Shah, Senior Vice President at Geojit Financial Services, joins us. A very good morning to you, Gaurang, and a very warm welcome. in the first week of this current financial year. How do you see sentiment on Dalal Street, and what do you think that the Reserve Bank of India will do in its forthcoming credit policy? We'll discuss individual stocks a little later.
Thank you, Shail. Morning to you and good friend Sakshi. And I think the sentiments on the Dalal streets are in pink of health. What can I say? It started the new financial year on 1st of April with a big bang. We recorded all-time highs on 1st of April. That is on Monday. And then a little bit of consolidation and sideways move. I think this will continue. Of course, we'll have events unfolding on 5th Friday, April. We have the credit policy, and then from next week we'll have earnings curtain raiser for the fourth and the final quarter of this financial year. And then from 19th April, the first phase of the great election kicks off. I think we'll possibly see a lot of choppiness and volatility. And of course, add to it, Shell, I think we'll have the global events also, which will possibly have its impact on the market. So my sense is, Shell, that markets are going to be quite choppy, volatile till the time we see the election done and dusted and the results out on 4th of June. Till that time, I think one has to fasten the seat belts. There'll be both side moves, two-way moves on the up and on the downside. But I think if the market gives you correction on the downside and you have the investable amount and a long-term time horizon, you will have plenty of opportunities, Shell, to cherry pick some of the great investment ideas. And I think on fallback of fourth quarter also, I expect some decent upgrades post the earnings. On the credit policy, the question that you asked me, I think status quo again for the seventh or the eighth time, and more and more comfort zone in terms of inflation easing off, coming into that comfort zone of the MPC and the RBI governor, and post that any talks of rate cut. I don't think any rate cut announcement we can expect this Friday when the credit policy is there. But commentary will be definitely something that I'll be excitingly wanting to listen into in terms of the India growth story and where does the global economy lie.
Fair point. And it's more than obvious that the kind of movements that we are seeing or hesitancy that we are seeing in the US Federal Reserve chairman's thoughts about impending rate cuts, I'm sure that will translate equally well on this side. Let's get to brass tracks, Gaurang. You've been a phenomenal tracker of the cement space. I don't think so I will ever forget JK Lakshmi Cement that came from you at about 350 to 400 rupee levels, but it's the big boy now, Ultratech Cement, a new expansion that has come on stream, and the fact that Ultratech alone is 150% more than the entire cement capacity of the United States talks about the size and shape of this cement giant. What is your view on this one? 10,000 is with the bulls. Where is it headed?
Sushil, I think entire cement sector has been buzzing, and I still remember conversation with you, and normally the feeling on the street during the monsoon that construction activity is slow, etc., etc. And I have always held the opinion on the other side in the sense that, look, gone are the days when you had to keep your structure for 21 days to get it absorbed and dry, etc., etc. You have ready mix, you have new age technologies, you have blocks of concrete cement available which is ready to install, and you don't have to wait for 3 weeks for it to kind of give you a stronger durability. So I think throughout 365-year construction activity is there. Government coming into place once again on 4th of June will only excite me in terms of more infrastructure activities kicking off. We have already heard the number of airports the government wants to build, the number of ports they want to construct, freeways, expressways, highways. The consumption of cement and metal, Shell, I'm quite excited is going to go up. Pricing power is going to come back. Margins are going to look much stronger going forward from here on. And the most important thing, Shell, is the input cost via operational efficiencies and lower input cost margins are going to improve. So, and Ultratech is one of the largest capacities in its. So we have coverage over there. We have coverage on Ambuja. We have coverage on Grasim, ACC. Uh, we have mid-cap names like Gramco Cement, Dalmia, Bharat. You recollect, Shell? I think it was at 1,100 we spoke, and the stock has more than doubled now. Uh, Birla Corp is something that we are again extremely excited about. So cement is, and you have real estate sector improving. You have the private capex kicking off. You can very well visualize where we are heading in terms of consumption for both commodities, cement as well as metals.
Okay, very good morning to you, Gaurang. The other point that I wanted you to talk about is the way the oil prices are inching higher. 5-6 month highs now, $89 for the Brent, and this is after the Ukrainian attacks on Russian energy facilities, escalated conflict in the Middle East. There are supply shocks again, limited supplies and inventories. How would you really look at this really playing out for the Indian oil and gas story, which has been robust, and we've discussed it many times over, be it the upstream majors, ONGC, RPL, Chennai Petro, Oil India, or the oil marketing companies, where you've number of times mentioned that you do have a coverage on all three?
Morning to you as well, Sakshi. Great speaking with you this morning. So this has been always a problem, and especially for oil marketing companies, it is a sword which is hanging on the head during election time, because just some time back we had a reduction of petrol and diesel prices by about 2 liters per liter. Uh, I guess there was talks of 10 rupees per liter cutoff coming through, but that did not happen. Finally, we had 2 rupees cut per liter of petrol and diesel. And this came in at the time when the situation in the global arena were not very conducive. We had the unfortunate incidences at the high seas by Somali pirates or Houthi rebels. Then we have the unfortunate situation of Ukraine attacking one of the largest refineries in Russia. And the problem is rupee is 83.35, 83.40 to a dollar. And your Brent is at about 87, NYMEX is at about $83 to a barrel. Doesn't augur well. I guess one will have to look at what kind of comfort zone we have in terms of imports as far as rupee dominated trade is concerned when we buy crude oil from the international arena. We remain positive as far as all the three oil marketing companies are concerned, HPBP, IOC, along with exploration companies like ONGC, GAIL India, Reliance Industries amongst the private players. But actually the problem is the near term, and of course the unforeseen circumstances in terms of geopolitical situation that will unfold.
Okay. We've discussed largely the macros. Could you share with us, Gaurang, your top stock ideas that you will be going with today?
Yes, actually, so I recollect speaking about defense-related stocks with you all, other than Cochin Shipyard, of course.
Yeah.
So, keeping in mind the earnings season, Sakshi, I think not only the fourth quarter, I'm not talking about short term. Normally, I don't talk about short term. But since the earnings are on the horizon, next week onwards, we'll have a curtain raiser, like I mentioned. Banking and finance is something that is very interesting. And my sense is that the numbers from PSU banks as well as private banks and some of the NBFCs are going to be much stronger compared to the third quarter. So the first one would be State Bank of India from the public sector bank. And the second one, which is non-performer up until now from the private sector arena, is Kotak Mahindra Bank. So on State Bank, I think we should be looking at 850 plus targets between medium to long term. And on Kotak Mahindra, I think 20 to 50 or thereabouts could be the levels. These are fundamental ideas, Sakshi. These are not short term, medium term. So I hope your viewers will pay attention to that.
Absolutely. We'll again draw the chart of Cochin Shipyard, and I should add Cochin Shipyard to your wonderful call on JK Lakshmi Cement. Again, we will never at Business Today forget the resounding faith that you put into Cochin Shipyard when it was somewhere like 750 odd post its split adjustment, and the stock had rallied on the clarion call that you had given at that point of time. So JK Lakshmi Cement for the old worlders like me, and Cochin Shipyard for the new guys who've joined us very recently. Gaurang, you yourself brought up the earnings theme that I was about to discuss. I just want to understand what are the 2 or 3 broad themes that you are looking to address as far as corporate India is concerned in this quarter, which is upon us fairly shortly? How about margins? How about top line? How about profitability? And how about profit? What is the picture as far as Nifty is concerned?
So if you're asking me for the near term share, let me give you a broad range on the Nifty. And I'll try to keep myself uh, uh, limited to Nifty because of my ability to understand. Uh, my sense is that if we are able to take off 22,550, that is 22,550 on the Nifty spot decisively and give a closing above those levels, or we stay afloat above those levels, then 22,700, 22,800 could be a reality. Uh, this is, of course, subject to all the data points on the local and global arena that does not disturb us too much. On the lower side, Shell, if we breach 22,150 and give a close below that, then I think the downside might open up by another about couple of hundred points. Could be 21,950, 21,900. I hope we are able to. The reason why this range is so broad, Shell, is because of the moves that we've had on the Nifty and Sensex. So you will have these kind of moves, and I am quite optimistic that we'll have opportunity to see the breakout of 22,550 rather than see a breakdown. So, and within this time, stock specific moves will be there. Corporate India, in terms of earnings, if you ask me which sectors will do well, so I have mentioned banking already, autos, cement, defense, power, and possibly a little bit of improvement in the FMCG sector as far as consumption and demand is concerned. So this is the overall view given the present events of that lie in the backdrop.
Okay, we'll just touch upon the Nifty in a different format once the pre-open rates are settled. They should be upon us fairly shortly. Remember, the GIFT Nifty is giving us an idea of about a 35 to 40 point downtick, which is fairly fine. The Nifty remains in a consolidative to sideways zone after an 800 point uptick in the previous 7 odd sessions, and that is something that is getting digested by the market. The Nifty now 75 points lower, 22,450 is where the bulls have begun their day on Wednesday. Remember, it's the Bank Nifty's expiry today, so that one is likely to be sort of flat. Now let's look at the stocks that are on the move. I'm interested in watching what HDFC Bank is doing. It's 13 rupees 85 higher at 1494. How about Infosys? Infosys is 12 rupees 50 higher at 1495, and Reliance. Okay, Reliance is down 24 at 2950. These are the 3 heaviest index weights as far as the Nifty is concerned, and lo behold, the Nifty is now back in the green, almost 22,525. Remember, this is the level which was a supply zone even yesterday. So this is something to be noted. TCS is opening 3% higher, 4,000 right there in front of you. It's almost green as far as the index heavyweights are concerned, except for Reliance. We'll wait for these prices to settle. Beyond Reliance and beyond the index heavyweights, let's travel towards the F&O space and see what's buzzing at that end. Z Entertainment, 4% higher, 130, reacting to news reports that the top man there has taken a 20% pay cut. Ultratech Cement, firing all cylinders, 10,300, 2.6% higher. You have the auto space in the green, Hero Motors and Eicher about 1% higher. Aditya Birla Fashion Retail, second day of gains, 1.6% higher, 239. That's how, for the moment, the F&O stocks on the green side are moving. Let's look at what's in pain. Okay, AB Capital, 2.5% lower, 196.55. Idea Cellular, 3% lower, 13 rupees 05. A quick look at NSE 500, and I believe Mitesh Panchal has also joined us for a technical check on the market. Let's look at the top gainers on NSE 500. Schneider, another 5% higher, 857.85. Remember, that's the upper circuit. Adani Power, third day of gains, almost 2% higher, 600 is what you see. I'm sure this is somewhere near its record high. What's also moving is Thermax about 2% higher, 43.90. This is how pre-open is at the moment. The Nifty is 100 points higher, ladies and gentlemen, a fresh record high, 22,550 for you. I think for a change, it's Gaurang, who's a very well-known analyst on the balance sheet side, has given a technical outlook on the Nifty, and the index has really appreciated it. I just want to see what Reliance is doing. It's just 0.5% lower at about 29.58. So fine shape, ladies and gentlemen, as far as markets are concerned. Mitesh Panchal is with us. Mitesh, your two stock picks for today.
Okay, so good morning, Shail, and good morning to the viewers. Now, the first pick is Balrampur Chini. If you look at the structure of Balrampur Chini, it had made its intermediate high on 29th of November 2023 at 476. After that, it is forming lower top lower bottom formation on a weekly chart, on a daily chart as well. But since last few days, after forming its bottom in the range of 345 to 350, stock is now picking up, and we are of the view that the consolidation phase is over. Yesterday, interestingly, on the daily chart, the stock has closed above its immediate resistance levels of 378. Yesterday's close was 383. So we are of the view that on the daily chart, the stock has witnessed a strong breakout, and now this breakout will extend and turn into a trend extension, which will lead the stock to test 420 eventually, and then 465. So one can go long in Balrampur Chini at 383 with a stop of 350 for the first target of 420 and second target of 465. Second stock is Bata India. Now, a similar chart pattern in Bata India as well. Stock has formed its intermediate high in 2021, 18th of November 2021 at 2,262. After that, stock has formed lower top, lower bottom formation on any chart pattern, whether it's a quarterly, monthly, or a weekly. And since last few days on the weekly chart, the stock is defending its lower end of the range, that is between 1340 to 1360. And now the stock is ready for a strong up move. So sooner than later, stock will cross its immediate resistance level of 31397 and enter into a new trading range. So at the current level at 1374, it's a buy with a stop of 1320, 1320 for the first potential target of 1473, followed by 1492.
Very good morning to you, Mitesh. You've discussed with us two of your stock ideas, particularly on the metal space. I wanted to ask you, a lot of stocks will be in focus because they've recorded, strong growth in terms of production. So Nalco, JSW Steel, Hindustan Zinc, MOIL, they're all inching up higher in the initial trading action because all of them have achieved record production and sales in FY24, best ever figures since inception for some of them, like MOIL for sure. How are you looking at trades here in the metal pack?
Good morning, Sakshi. Now, you picked up the right sector because if you look at the metal index, even it has given a breakout recently. So within the entire metal index, the promising chart is Hindalco. After forming its bottom in the range of 500 to 520, stock is forming heart of higher bottom formation since last 5 weeks. And it's a very strong comeback. So now we are of the view that the stock is entering into a new trading range. And the immediate target is from where it has witnessed a correction, that is 608, which it has formed on 8th of February 2024. So now the stock is up to test this level at 609, 610. So at the current levels, 571, one can go long with a stop of 550 for a potential target of 608.
Okay. So that's Hindalco for you. I'll ask Gaurang also for his view on the metals pack. Gaurang, how would you really look at this space now?
So, Sakshi, there are very simple points and dots which we need to connect when it comes to understanding the entire metals universe. First of all, I think whatever data points we had from China over the last two instances were very positive. Though I take whatever comes out of China with not a pinch of salt, but a fist of salt, because the data is absolutely irrelevant to me, and credibility is a big question mark. But nevertheless, it helps the entire metal pack. Domestically also, I think what we heard post the third quarter from respective managements likes of Tata Steel, JSPL, JSW Steel, Hindalco, etc. By and large, the thought process was that the flat and long product prices are likely to move up north, and thanks to the lower input cost, the margins are likely to improve going forward from here on. And as I was mentioning during my conversation with Shell, that the infrastructure activity, Sakshi, you need two basic commodities, that is cement and metal, without which you cannot create a durable infrastructure. So domestic consumption, my estimate states that it's likely to go up along with the prices as far as flat and long products are concerned. We have coverage on GSPL, GSW Steel, Tata Steel, and Hindalco. On Vedanta, since our targets are in place, we have sell, stock, reduce or book profits recommendation.
Okay. Let's get back to the Nifty as far as pre-open prices are concerned. They've settled in the red. The Nifty is now 67 points lower, 22,385. The Bank Nifty on its weekly expiry day is showing signs of a 200-point downtick, a 100-point downtick on the IT index, and about 1/5% lower on the NSE 500. So we are starting Wednesday on the back foot as far as bulls are concerned. Mitesh and Gaurang, this question is addressed to you both. Gaurang, coming to you first. BEL, 2 days ago, the company gave an update on its FY24 sales and its order book, which have been appreciated very well by the market. No price for guessing, it's at a record high. How do you see BEL from now on? And then Mitesh will give a technical view on the same stock. Gaurang, first to you.
Let me give you a very honest reply and a disclosure. I think about a week or fortnight back when we were in conversation, I had mentioned about the entire defense pack, whether it is HAL, BDL, Mazgaon, Cochin, BEL, BHEL, and the kind of outlook that we share as far as the entire defense universe is concerned. Now, the disclosure is Shell that yesterday, before the market opened up, I was on one of the business news channels and I had given BEL as an investment idea at around about 214 or 15 yesterday when the markets opened up. Of course, post market opened up, it went up to a new all-time high of about 222 plus kind of levels. We have coverage on BEL, and my understanding is that with the kind of orders that they've secured over the last couple of months, the order book stands very strong. And more importantly, Shell, the capability, expertise, experience, and ability to execute that order book, because it stands in the complex defense arena, wherein you have high precise, high technology oriented products being manufactured by BEL. And sometimes it takes longer because of the complexity involved and the approval process that is involved. But I wouldn't be surprised to see BEL at about 245 plus kind of levels on fallback of earnings and order visibility.
Yeah. Mitesh, to you on BEL.
Okay, Shanti, as far as BEL is concerned, if you look at the chart pattern, right from the consolidation phase which it had on in the month of March 2023, every time when it has corrected, it has bounced back very strongly. The first correction came in from after the September high at 147, then the stock went up to 127. After that, from 127, it had a rally to 195 in the month of January 2024. After that, it witnessed a sharp decline from 195 levels to the tune of 171 in the month of February. From 171, it had made a high of 216 recently. And if you look at the week ended 15th of March, it had a very brutal correction. From 216, it went down to 179 and given a close at 189. And from that, it has also made a new high, record high. The stock is at a record high. Okay. So the chart pattern is telling that every correction has been bought into. So the volume is also supporting. We are of the view that in the current extension of the trend, the stock will test not less than 250 to 280 range. So definitely, even at the current level, it's a buy. The reason being is this, that every dip has been bought by the market participant in recent past, and the stock is in a very strong hands. So we are of the view that sooner than later, stock will test 250, 280. one can go long with a stop of 195 for the potential target of 280 in the next 15 to 20 days.
Okay. Mitesh, one stock that I wanted to draw your attention to is Anupam Rasayan, that is in focus on the back of news flow that it signed a $90 million deal with Japanese multinational for advanced intermediaries. The stock is shot up in the pre-opening trade 6.5% odd. Is there a trade here that you would like to track for investors?
See, first of all, it's a low liquidity stocks, and recently, after forming its bottom, it had given a very strong up move. So the stock is in the consolidation zone. So we will wait and watch. Probably today's price action will have to see to it whether it close above 920 or not. If it doesn't close above 920, then it does not qualify for the extension of the trend. So I'll wait and watch. Let's see whether today's close is above 920 or not. If it is, then we'll take a call. Otherwise, as of now, it is advisable to leave the counter.
Okay, fair enough. Gaurang, to you, I wanted to actually draw your attention, since we were talking about the metal pack, the precious metals, they are on a huge run up. Gold and silver prices are at record high levels. Even today, 900 rupees a kilo is what silver prices have moved up in trade, and gold prices inching higher too. What does it mean for the investors of the gold financing companies? We've been seeing some kind of upticks coming here. And of course, in case you can also give us a broader sense of, for a well-diversified portfolio, what should investors do now?
Well, first of all, I hope you have visited your family jeweler many years back, and you would have collected your bounty from them and invested in gold because of the kind of moves that we've seen. But Sakshi, let me be very honest. I think, gold, other than equities, of course, I have been inclined towards gold as a precious metal right from the year 2007. And I've been tracking gold from 2007. And this is only because of the interest that I have, not that I have great knowledge about it. But and during every time that we, as a brokerage house, a responsible brokerage house, we have many events in terms of investment awareness programs. And I travel the length and the breadth of the country, and of course, because of our JVs in Middle East, I have opportunities to visit uh, Dubai, Abu Dhabi, etc., Muscat, Oman, etc. What I have gathered over a period of time is, and whenever I interact with, by and large audience through channels like BT or otherwise, my humble request to all of them was that if you have 100 rupees to invest, invest 80 rupees in equity market and invest at least 20 rupees in gold related, gold ETF, gold sovereign bonds or physical gold. The reason being that, like you rightly mentioned, diversified. Now, I picked only two asset class, just to give you an example. But even otherwise, if you are at the age of maybe about 25 to 30, and if you have a longish time horizon and an equal risk appetite, that put 60% into equities, put 15 or 20% into gold, and put 20% related to life term insurance, etc., etc. That will give you a good spread. My understanding was that gold is likely to go up. It will not give you returns the way equity does because it is not a comparable asset class. But 75,000 is the target by December 2024. I hope we will be there before that. And purely because of the unfortunate geopolitical situation and of course, currency related issues in various economies, I think gold is likely to post the best returns that we've seen over the last many decades. And if you've not visited your family jeweler, please do that.
Well, that's a sage advice that's coming in from Gaurang. The prices are in front of us as far as markets are concerned. On the back foot, ladies and gentlemen, are the bulls. About 90 points lower on the index, 22,363. The Nifty bank is about 1/3% lower, 158 points down, 47,384. The IT index is in the red, 100 points lower. And the NSE 500 is also 70 points lower. Let's look at how the index heavyweights are moving, and for the moment you see just one stock amongst the top 10 which is in the green, which is Axis Bank, 1.1% higher, 1059. I thought I'll mark that up front. Okay, Reliance 23 rupees lower, 2950. HDFC Bank 5 rupees lower, 1475. Remember, it's been up for the last 3 days, so a bit of a profit booking. Infosys 6 rupees lower, 1476. How about Bajaj Finance? 10 rupees lower, 71.95. Okay, we'll shift to FNO stocks. The top gainer at the moment is National Aluminium. The rally in metals refuses to die down. 169 for you, 1.6% higher. Ultratech Cement taking it away, 1.6% higher, 10,200. ONGC, as I had mentioned, 1.6% higher, 276.70. Okay, ABB, Vedanta, Axis Bank are the other gainers. Amongst the losers on the FNO side, Bharat Forge 2% lower, 1130. Ashok Leyland 173.20, 1.9% lower. A quick detour to NSE 500. Okay, I must mention Patanjali Foods. There is an ongoing, how should I say, tiff between the Supreme Court and the top management of Patanjali Foods, which is now sort of reacting adversely on the stock price. At 1370, down about 2%. Okay, the top gainers on NSE 500, ladies and gentlemen, for the moment are Anupam Rasayan, 4% higher, 924. The PAR stocks are taking it away. Adani PAR 2% higher, 603. Cochin Shipyard, it's up now in 4 digits. It's saluting Gaurang, 1016. This is a fresh high, 3.2% higher. And of course, Schneider Electric now just 0.5% higher, actually 1.5% higher, 830. All-time highs on NSE 500. Cochin Shipyard, JSW Energy, Adani Power, Schneider, Linde India, BEL, and of course Reddington. Let's go to Mitesh first. Mitesh, what catches your fancy in the initial trades? Nifty now down 80 points.
Mitesh, you may be on mute. Could you please check?
Yeah, sorry.
Mitesh, this was to you.
Yeah. So first is AU Bank. I think AU Bank has the potential to move up today. It has formed its bottom in the range of 570 to 75. Today is trading at 584. So with a stop of 575, one can go long in AU Bank at 584 for a potential target of 600, 610 today. And the second stock is Bharat Forge. Again, Bharat Forge 1.7% down, but it is showing strength. The support is at 1120. So with a stop of 1100, one can go long in Bharat Forge at 1138 for today's potential target of 1170 and 1190.
Okay. Mitesh, you talked about Hindalco before the markets have opened, and it's the third top gainer on the Nifty right now, 1% higher almost. Along with it, MOIL is the one that's taking it away, that we briefly discussed on the strong data points that it had come out with. 5.5% higher for MOIL as well. Would you give us a next target on MOIL?
See, MOIL, as I said, again, we'll have to see the extension of the trend. 310 is what we are looking at. If it sustains on an hourly chart, that means at 10:15, if the close is above 310, Sakshi, then probably today's trade, the stock has the potential to drive up to 330, 340. So let's wait for 10:15 candle. And if it closes above 310, then yes, definitely it's a buy for an intraday.
Okay. Gaurang, I'll come to you. We've discussed multiple times over the power space, and you've given us a list of stocks that you're positive on, starting from NTPC to even the power finances. IREDA has been again on the uptrend after, consolidating a little bit. Is this a stock that you track as well in the power space, or are there other stocks that you'll be bullish on?
So this is basically a company which came into existence just a couple of months back via the IPO route. And the floor was, I think, about 120 odd. Beg your pardon, 36 rupees. Yeah. Sakshi, correct me if I'm wrong, the floor of the IPO.
Yes.
So we had discussed this during that time, that we have a subscribe recommendation for the IPO from a long-term point of view. Post that, the stock surpassed 200 rupees. And then it is in a consolidated zone. So this is the company which is basically into providing finances to renewable, clean and green energy capacities that are going to come up and that are coming up. And I was listening into the commentary of the management, which looks extremely, extremely strong. So on the basis of that IPO note, in case if you have invested in IREDA, I beg your pardon, then you can definitely stay invested or look at opportunities on the lower side to get into the stock from a long-term point of view.
Okay. 3.5% IREDA looks strong at this point in time. You know what's all in the future space that's buzzing? It's the entire metal pack and the oil and gas pack, along with cement space. Commodities really taking it away. Nalco is the top mover, 3.2% higher. Hindalco up by 1.4%. Vedanta up by 1.5%. You also have GAIL India that's moving up 1.3% higher in trade, along with Ultratech Cement, that of course is the top mover on the Nifty and on the future space as well. IEX is buzzing in trade. SAIL or the Steel Authority of India, that's also moving up in trade as well. Anything else from the oil and gas or the metals basket, Mitesh, that you think positive on the charts that looks that one should track now?
Tata Steel, undoubtedly, because it's trading at its lifetime high, and we are of the view that now Tata Steel has more legs to go, and probably the stock will definitely surprise the street. If you look at the weekly chart, it's a phenomenal move after forming its bottom in the range of 130 to 138. And if you look at Sakshi last 3 weeks pattern, it is really very strong. I mean, we haven't seen such patterns at least in the next 2 years, in the last 2 years, as far as Tata Steel is concerned. So yeah, Tata Steel very bullish, probably sooner than later, probably in the next 3 months or so, the stock will cross 200 mark and will be heading for 210, 220. So definitely at the current level, with a stop of 140, one can go long for a potential target 200, 210 in the next 3 months.
Okay. The stock that needs to be watched, ladies and gentlemen, is Hero Motors. After a drubbing that it got for the last 2 odd days, it seems to be on an uptick, 45.70, 45.90 for you as far as cash is concerned. Mitesh, very quickly, is this a reversal or should one stay away?
You're talking about Hero MotoCorp, right?
Yes.
Okay, yeah, Hero MotoCorp. As far as Hero MotoCorp is concerned, I think now one has to take the position into the stock with a trailing stop loss, MG, because 4480 is a pretty strong support, and we are of the view that if 4480 is broken on the weekly chart, then probably there is a reversal or a profit booking in that stock. So with a stop of 4480, one can continue to hold if you have. For the new position, again, the stop loss remains the same. And on the upside, we are of the view that 4,650 to 4,700 is a reality sooner than later.
Okay, I think the PSU basket needs to be paid attention to. One stock that comes to my mind immediately is National Aluminium. Fresh record high here, ladies and gentlemen, and the move is fairly substantial and it continues 5% higher, 173.65. Very quickly, Mitesh, what would you do? Chase this or stay away?
Absolutely chase the entire metal stocks which are at a lifetime high. After a very long period of time, Shailji, these stocks are trading at a lifetime high. And generally, what happens is in a metal stock, when it trades at a lifetime high, the risk reward ratio will not allow you to continue the open position. But on the contrary, it will give you the maximum gain. So the best way to trade these counters as far as the cyclical counters are concerned, like I would like to mention the name of even Balram Puccini as well, is to trade with a trailing stop loss and just keep continuing as long as the trend is alive. If you remember the entire rally of REC many people have missed or will not be able to tap the entire rally. Here we are not talking about tapping the lows on the lows or the highs, or would like to take the maximum benefit of the trend. But if you adopt a trailing stop loss strategy, then probably you will be getting the maximum out of a trend. So in the Nalco, 145 should be your trailing stop loss. Just keep increasing it as long as the trend is intact. We are of the view in the current rally, the stock has the potential to trade in between 220 to 250 in the next 3 to 6 months. A very strong trend. If you are in the position, if you have an open position, long position in the stock, do not be in a hurry to book the profit. Please continue the position with a trailing stop loss strategy.
Okay, so that's a bullish view coming in on the entire metal pack, and this space seems to be in the thick of action, and we will continue to track the momentum that's being built here. Gaurang, to you, apart from this space, I think the mid and the small cap space, we want to understand from you what is your own stance here. Weeks back, of course, this entire space was very, very volatile. There were discussions about froth being built up in this space, and overheating now happening. After a gap again, this space is on the uptrend again. How do you really see the small and the mid cap space now?
I think it will be a while before we see a little bit of uh, sanity returning to the entire universe of mid and small. Uh, I'm not saying that there are no investable ideas in the small and mid cap universe, Sakshi. There are plenty of them, but you need to have uh, a magnifying glass in your hand to identify those opportunities. Now, the unfortunate thing is, or the situation is, that retail investors get sucked into each and every, single digit, double digit stock that has been in the spotlight on the unsolicited uh, international university of WhatsApp and the X and the Y and the Z of the world. And that's what exactly reflects upon. Along with that, you had a regularity issue also, and the mutual funds have given clarity in terms of stress tests, etc., etc. But the problem, Sakshi, what I see is that most of the names which have rallied did not command that kind of level in terms of stock price because of the earnings which was at the backbench. Now that earnings have to catch up, and that looks a little difficult. So you need to be sector and stock specific in the mid and the small cap universe. Not anything and everything that you touch will turn from dust to gold.
Absolutely. So, Garang, since you talked about the earnings picture, we are just going to be looking at the earnings season get started. Which way would you be looking at for, positive earnings, outperformance coming in this quarter now?
So mid-cap IT should do well, though there was a small disappointment in the third quarter in the mid-cap IT. Large cap will possibly have a little bit of trouble time. Mid-cap metals, mid-cap banking, mid-cap NBFCs, mid-cap auto stocks, mid-cap auto ancillary, tire, battery manufacturing companies, mid-cap cement, like I was discussing with my good friend Shell. There are a lot of names which are over there. Mid-cap FMCG companies look quite well placed. And some of the plays related to defense, power, and infrastructure.
Okay, let's get back to the spotting of stocks. There's no action in Nifty and Bank Nifty, but it's thick trade as far as broader markets are concerned. We'll spend some time on advanced decline ratios on the National Stock Exchange. 1275 stocks are in the green, just 734 in the red. The mood and the tenor is on the back foot as far as bulls are concerned. We track 19 indices for you. Of 19, just 4 are in the green, led by the metals and the media index. Where is profit booking happening? Nifty Realty Index 1.3% lower, PSU Banking Index 0.5% lower, the Pharma Index 1/3% lower, and so on and so forth. So the markets are now pausing after a 7-8 day very strong uptick. What is rising? Remember, I spoke about Oil India. Fresh record high, mainly because of strong crude oil prices. The entire defense pack is now in an uptrend. As I had mentioned, Cochin Shipyard has a particular affinity for Gaurang. Fresh record high, 1030. You have the railway pack firming up, IRCTC, 1018. You have Tata Power, 412.85. Let's get Mitesh into this conversation. Mitesh, a very, very strong breakout on Cochin Shipyard. Second day of gains. How are you looking at this stock?
As I said, we discussed in case of metals as well. I mean, all those stocks which are putting at a lifetime high, where the momentum is very strong, just use the trailing stop loss. Over here as well, Kochi Shipyard a fresh breakout. We are of the view that the stock is in now a kind of a pause where it will taste 1080, 1080 and 1120 sooner than later. And we have to also, Saiji, understand that what kind of buying is emerging at what levels in these kind of stocks. Okay. So we are of the view that these kind of buyings are sticky money, and the trend is not fake. It is here to extend and it is here to stay. So with a stop of 980, one definitely can go long in Kochi shipyard at 1032 for a potential target of 1080, 1120 in next 5 to 7 trading sessions. Very strong up move. One should not miss the stop.
Right. Let's
Okay.
again.
The other
Yeah.
stock that I need to mention is IRCTC. This one is now back in 4 digits and is rising very rapidly. This one is for you, Mitesh. Third day of gains, and the most recent high of 1050 is in sight. What do you think of IRCTC?
It's about to witness a very strong up move, Shailji, because after its recent fall from 1046 level and spending a quality time in during 4 weeks in consolidation between the price range of 900 to 950. Since last two trading sessions, it is forming a heart of higher bottom formation with a very strong volume. And here the eye-catching thing is the volume. If you look at last 2 days volume, and especially the delivery-based volume, it's pretty good. Apart from that, it has also successfully crossed its recent high of 689, which it had formed on 26th of February 2024, and now comfortably trading above it. So we are of the view that it will cross its recent immediate resistance level of 1050, which it had formed on 20th of January 2024, and sooner than later will head for its all-time high of 1279, which it had formed in the October 2021. So at this point of time, if you ask a simple question that which stocks are likely to surpass its recent high, I see IRCTC is in that category. And yes, with a very strong volume, the stock will strongly move up in coming days and will hit 1300 as a new high. So definitely it's a very strong buy at the current level.
Okay, a very bullish view coming in. 1300 as the target price for IRCTC and may surpass its earlier highs as well. Gaurang, is railway space something that you'll be watching out for the new fiscal as well?
So I hold my conviction very strong, Sakshi, for three sectors which are doing wonderfully well on fallback of government policy changes. We already discussed defense, we have discussed power sector and railways. And I would not want to point or flag off one single company. I would rather comment on the sector. And my sense is that for the next 5-10 years, the entire universe of companies which are government or public or private, I beg your pardon, uh, associated with Indian Railways is likely to do phenomenally well. And that is purely because of one statement that I possibly dissected well, which was made by our Honorable Minister, Mr. Nitin Gadkari. And that is the dependency of ours on the transportation as far as goods and services is concerned on roads. It's almost about 70-75%. Now, this because of the problem of Indian Railways last mile connectivity. And he wants to get rid of this. And over the next 3 to 5 years, I think you will see significant development and this issue being addressed. And my sense is that you will have great opportunity for long-term investors, be it private or be it public railway-related companies. I think a similar performance like the way defense is doing will be seen in power and Indian railway sector.
Okay. That's again a very positive view coming in. On the other hand, on the transport finance company, then I'll ask you, Shriram Finance, the way it got included and it got a slew of funds coming in, it's now the top mover on the Nifty again. Is this a space that you're watching out keenly as well, Gaurang?
So, honestly, Sakshi, I think Shell will vouch with me. I have never been a great, uh, I have never been so greatly excited with respect to NBFCs. And I mentioned in my opening comments about banking, public, private, and NBFCs. And I have always often believed that, this entry and exit, Sakshi, are just a matter of 1 or 2 days. Once the entire excitement is over and the froth settles down to zero level, you start talking about fundamentals. And according to me, entry and exit does not change the fundamental or the working of the company. It remains intact. It's only a matter of that short to medium term. So we've been positive on this company for a pretty long period of time, and we still maintain a positive view on this.
Okay.
Let's spend some time on where action is in the PSU basket. I think taking it away are the power NBFCs, and that's fairly sensible because the actual power sector is in top shape. We've discussed Tata Power, Adani Power, Torrent Power, as also JSW Energy, all of them at record highs. Now it's PFC and REC. These are the stocks that are moving fairly rapidly. Let's look at what PFC is doing at the moment. For the moment, right there in front of you, as far as prices are concerned, 1.2% higher, 412.65. And we also have REC Limited, 472, 1.8% higher. These are very high beta stocks and have always responded very positively to any buying that has happened on a downtick. Mitesh, what are the charts of PFC and REC telling you?
The key takeaways from your speech is always responded positively. If you look at the entire PSU basket, before 3 weeks I'm on the show and we had discussed at length about it that the PSU basket is up in the year 2024, if you remember. And now, so let me tell you, when the PSU basket, technically, this is I'm sharing my experience with you. When technically any PSU stock, when it goes down, it will be beyond your surprise which level it will test. And when it starts moving up, it is also beyond your thought process where it will go. So PFC, REC, SAIL, BHEL, Coal India, Power Grid, all are belonging to this category. Every time when it goes up, we think that it's a time to now book the profit, and from there it will surprise you. So in BEL, for an example, in the next 2 years, if it crosses 450, 500, it's not a surprise. In Power Grid, 350, 400 is not a surprise. Even in case of REC, PFC, probably 350, 400 is a very small target. So the rally is intact. And to understand the entire PSU space, Sanjeev, all you have to look is the entire quarterly and yearly chart, which probably very few people are doing it. So if you look at the quarterly charts and the yearly charts, you will get a very clear idea that the rally is here to stay for a very long period of time. So we are extremely bullish on the PSU basket. In the recent correction, the stock has corrected to a good level, and now the rally is resuming, which will take all these stocks to an unprecedented level. So for a normal or for a retailer, it is always a surprise to see where the stocks are moving.
Okay, and a quick one on Mazgaon Dock. This one is coming back very sharply, Mitesh. What do the charts of Mazgaon tell you?
Mazgaon chart, Kochi shipyard chart, BEL charts are only that the language is the same, Shailji. Just pick up if you can and trail the stocks with a trailing stop loss. That's the only strategy. So at 2050, yes, with 1980, one can go long in the stock. The rally is resumed, and in this leg, the stock likely to taste 2250, 2300 in next 1 to 3.
Okay, like we said, it cannot be a day when Gaurang is with us and Cochin Shipyard does not hit a fresh record high. 1033 for Cochin Shipyard today. Gaurang, what's next for Cochin?
Sakshi, I was waiting for you or Shail to ask me this question. And I'll not keep my comments restricted to only Cochin Shipyard. I will extend my views to likes of, I'll again repeat myself for the benefit of all your viewers and investors. Hindustan Aeronautics Limited, Bharat Dynamics Limited, Mazgaon Docks, Cochin Shipyard, BHEL, BEL, likes of certain private players in the defense arena contributing to the safety of our country on the borders. Uh, for the love of God, if you don't need money, please don't book out of these companies, irrespective what levels they are trading at. And if you have the capability and ability to add on to your investment on any kind of correction, just go on adding it. I would even say that do a sip in the defense related universe, power related universe, railways related universe. And I think you will be laughing your way to the bank after 3, 5 years looking at the kind of profit and loss statements that will be in front of you. So, and gift it to the next generation, and also let them know how wealth is created in stock market. So that's my view on the defense, power related and railways related stock, especially defense related stocks.
What a fantastic way to sum it up, the kind of move that we are seeing in this. We are going to promise you that we will cut out this chunk and we will play it on loop on Business Today for all our viewers all through the day today, Gaurang, so that they can definitely understand this and take this down as they continue on their journey of wealth creation in the stock markets and for the future generation as well. Gaurang, there's one more interesting thing that I wanted to ask you, and that is a new IPO that's coming up. You know, from the Bharti Group, 4,275 crore rupees IPO opens today, Bharti Hexacom. The first one, after many years from this group. How are you looking at this space?
So incidentally, I got a call from one of the largest publication houses in India. It was yesterday, and the person at the other end asked me, why are the Indian large corporates excited to hit the street?
Yeah.
I only said that, boss, look at the opportunity that lies in front of you. I told them, I said, wait for 4th of June to be done and dusted, and we have the government in place, and then you see the way the entire scenario changes. And I think manufacturing and services are both going to be focused. And this is the opportunity. I think the promoters are now believing that instead of restricting themselves from not entering and going public, they want to create opportunities for investors and be part of that growth of that company that they have. So on Bharti Hexacom, 542 and 570 is the price band. We have given a subscribe recommendation through our IPO note, which we published, I think, yesterday or day before yesterday. And we have subscribed to go with the higher band of 570. And in terms of valuation, I think it's fairly valued. And in terms of opportunity, there's going to be plenty of opportunity for growth for this company.
Okay. One interesting thing I'd just like to point out, somewhere in 2001, February, I remember it so distinctly, Bharti Airtel got listed. You'll be surprised to know what the price of the IPO was, 45 rupees. It got listed at 42 rupees. Below its offer price. And over the next 6 odd months, 8 odd months, it went all the way down to 19 rupees. It was a very painful time for many of the original IPO holders. And from then on, there was a press conference that was held at 19 rupees. I so distinctly remember because I had covered it. And the CMD of the organization said, 4 quarters from now, Bharti Airtel will be in profit. It was a 13 circle company, an 8 circle company when it got listed, and then it went on to set up networks in 13 circles and then of course across the country. So from 18 rupees it moved to 80 rupees in a span of 4 quarters, and from then on, ladies and gentlemen, over the next 5-7 years it hit a high of about 1100 rupees. Then the stock split, and again it's recouped. So that's the journey of Bharti Airtel over the last 22-23 years. I was fortunate to have some stocks in the IPO. Had a terrible time, but over the course of 2 decades, it's made phenomenal money for long-term shareholders. Mitesh, coming back to you, Tata Power taking it away, 415. What does it say?
Very strong breakout, and we are of the view that the extension of the breakout will take place sooner than later. Tata Power at 415, definitely a buy. Above 412 on the 15 minutes and half an hour chart, it's a breakout. For the day, 408 is a stop. For the day, the target is 425, 430. And if you have a horizon of at least 1 month, then the stock will hit around 450. So definitely it's a buy.
Okay, so that's the power space ticking higher. Oil India record high levels, 4.5% higher at 658. It's the entire oil and gas space that's again buzzing in action. Of course, the Nifty oil and gas is half odd percent higher. Apart from the metals, this is the other index that's been taking it away. And ONGC, of course, is the top mover in the Nifty space stocks. And you now have GAIL, Gujarat Gas, Petronet LNG, GSPL, Indraprastha Gas also moving in tow. Anything from these gas stocks, Mitesh, that you like?
ONGC and GAIL. These are the two stocks which technically are on the radar. So GAIL, if you look at the chart pattern at above 185, the stock has given up its breakout and now is heading for 220. And as far as ONGC is concerned, yes, again, forming a high bottom formation. So ONGC is also looking interesting after a pause. Now the stock is heading for 300, 320. So yes, GAIL and ONGC technically looks promising at this current level.
Got it. Gaurang, what's ticking higher in green now finally is the IT space with Tech Mahindra, HCL, Tech Afford slightly showing some positive returns. You did say that mid-cap IT space is what you'll be watching out for in the earnings. How about the large caps? How would you look at Infosys, TCS, HCL Tech right now?
So we maintain a positive view, Sakshi, but the problem is normally the fourth quarter earnings for the IT sector is very erratic, and you have moves coming in both ways. There are already some jitters on the street with respect to the large cap names reporting below than expected numbers. But this is the problem of short to medium term, Sakshi. Starting the new financial year, 1st April 2024, going up to 31st March 2025 and
Okay. I think there is some kind of an audio problem. Yes, Gaurang. Now we can hear you again. We lost your audio in between. Yes, could you please repeat?
be loud and clear or see me properly, but let me just repeat. Fourth quarter earnings are going to be volatile. You will have plenty of opportunities to nibble into some known large cap and mid cap IT names, given that you have the next year and a half, 2+ kind of a time horizon. Don't expect any magical improvement in the fourth quarter for the IT universe as far as large caps are concerned.
Okay, ladies and gentlemen, we are now almost at 9:50. This is the first half an hour of trade is over. Let's pay attention to the Nifty. Frankly, it's doing nothing. The low that was tested was 22,350. This is what I had mentioned in my morning commentary, that if you get a low of 22,350 or thereabout, that's the place where you start a long trade for the morning, and then pray that you get 22,500 or maybe 22,450 exited at that point of time. It's actually the PSU stocks that have taken it away, and a very strong move coming in. The 4 defense counters, BEL record high, Masgaon Dock, Garden Reach Shipbuilders, and Cochin Shipbuilders. Cochin definitely record high. So 2 record highs, BEL and Cochin Shipbuilders. And then you have the entire space of the oil sector. ONGC, Oil India in top form. You also have very strong moves coming into the power sector, PFC and REC. And of course, some parts of railways is ticking very well, like IRCTC. Sakshi, what are you watching?
Well, Shail, there are some stocks from the fertilizer basket that are, surging ahead. Gujarat Narmada Valley Fertilizers is something that caught my attention. 7.7% higher right now. It's among the top movers in the F&O space. Mitesh, I wanted to take your view on this one. Is this a, momentum that you'll chase right now? What's really behind this sudden move?
Yeah, definitely. This momentum can be chased because after a steep correction from 815 odd levels, which it has formed on 4th of January 2024, so actually the stock has formed a lower top lower bottom formation. And since last particularly 3 trading sessions, including today, the stock is buzzing. So if you look at yesterday's trading sessions, it has closed at 659. I'm talking about cash levels, which is above its immediate resistance level of 646. So now the stock is for a very strong upside. It's a fresh breakout, and one should definitely chase this counter. In the current extension of the trend, stock is likely to taste 720 to 750. So the stop of 650, 650, one can go long.
Okay, well, on that note, Gaurang, thank you so much for sparing all that wonderful time with us. And, always a pleasure to host you on Business Today. You do have another show. Many thanks for being with us. And we'll have you back with more discussion on the markets pretty soon. Many thanks for being with us. Truly appreciate it.
Thank you. All the
Mitesh, thank you so much. Mitesh, let's again get down to understanding what more is moving. Banking space and finance space is somehow showing some ticks on the higher side. Axis Bank is now pulling up in trade. Is this a space that also interests you? Banking and finance, Gaurang had mentioned he'll be watching out for. But technically also, will this space be interesting?
Technically, the banking space, which excites us or which is looking very promising, Sakshi, at this point of time, is the entire PSU basket. If you look at the State Bank of India, the PNB, Bank of Baroda, and Kenya Canara Bank, these four banks are looking very interesting on the charts. If you look at the momentum of last few trading sessions, it is showing promising signs that now the entire space, PSU space, is up for a very strong upside. And sooner than later, we will see a single or 2 days where the stock will move up by 5 to 10%. So we are waiting and watching for the stock. These stocks, the four stocks have given the initial green signals, and now probably sooner than later we'll see a very strong upside in these counters. So we are particularly bullish on Bank of Baroda. We are of the view that 300, 325 is here. So with a stop of 250, one can go long in Bank of Baroda. Same is the case with State Bank of India. If you look at the chart pattern of State Bank of India, it is also promising. So from the current level in State Bank of India, you can also see levels of 800, 850. So with a stop of 740, one can go long in State Bank of India as well. So the entire PSU basket is looking very promising chartically at this point of time.
Okay, the stock that I want to mark is Oil India. Remember, this was a part of our pre-market conversation. The reason why I mark it is fairly simple. We've had a very, very strong breakout, ladies and gentlemen, and this is at a record high, 666.95. And what's really interesting is that the volume in the first 40 minutes of trade is more than the 5-day average. So 326 crores worth of shares on Oil India have been traded. The 5-day average is 316 crores. This is the breakout that one tries to catch. And given the momentum, given the way how crude oil prices have been moving, and the fact that there is very, very low floating stock on Oil India, is the reason why this stock is moving so strongly. Would you want to revisit your thesis on Oil India, Mitesh?
See, Sanjeev, one interesting thing which you have mentioned is a very strong volume. In such counters at 955, if you see such a volume, then it's a sticky buying which is going on. Let me add a technical commentary over here. The stock has formed its all-time high on 7th of March at 647. After that, it has seen a brutal correction, and from 647, stock has hit a low of 513. Since last 3 weeks post that, the stock is forming heart of R bottom formation with a thin volume. But today's volume and the price action is really promising. So we are of the view that this is nothing but an extension of a trend in which the stock is likely to taste 750, 800 sooner than later in the next 1 to 3 months. So yes, definitely one can go long in Oil India at the current level. This breakout or this upside is chaseable. One should chase this stock and will definitely end up making profit sooner than later.
Okay, well, on that note, Mitesh, many thanks for being with us onto this very special edition and sharing with us a number of stocks and trading ideas for all our viewers right there. Let's start winding up the edition. About 0.2% lower for the Nifty, 22,391 is what it's trading at. About 0.3% of a loss for the Nifty Bank as well. That's a 150-point loss for this index. 47,388 is where it is really trading at. When we now look at the top movers on the Nifty, Shriram Finance, that's 3.5% higher. It's the top mover on the Nifty. ONGC, Hindalco, Tech Mahindra, Ultratech Cement, Bajaj Finance, HCL Technologies are the other top movers on the Nifty, but a large portion of the Nifty stocks are actually slipping into the red. So the market breadth is towards the weakening stocks. The stocks that have lost the most in the initial trade today, it's Nestle, that's down 2.7% in trade. HDFC Life, Bajaj Auto, Britannia, Sun Pharma, Apollo Hospitals, Bharti Airtel. These are the stocks that have slipped in trade as well. Now, when we talk about the F&O movers, Gujarat Narmada Valley Fertilizers, that's the one that's moving very sharply in trade today. Nalco, Shriram Transport Finance again, GAIL, Steel Authority, and also Escorts Kubota has pulled up in the F&O action right now. Among the sectors, it's metals, small caps, ONGC, IT space, mid-caps, and just about slight ticks now emerging on the consumer durables. Rest of the sectors are seen, slipping in the initial trade as well. So that's as far as the first 1 hour of trade is concerned. We will leave you at that, but do stay tuned on to Business Today TV, as throughout the day there will be a lot of action taking place from the world of business and stock markets, and several interesting conversations to follow soon. So don't go anywhere, and don't forget to like and subscribe to our channel Business Today.
आज पूरा देश कह रहा है, तीसरी बार
मोदी। With the up की बार